Welcome to today's video. First off, I'm going to define my criteria for what I'm considering the best international dividend ETFs. The first criteria I have is dividend consistency. If you're intending to live off dividends, consistency and reliability is everything. This was actually a difficult attribute to find in international ETFs. Generally, the dividends were growing, but there were some decreases along the way. Contrast that to US-based dividend ETFs, where dividend consistency is the norm. So that was my first filter, dividend consistency, year after year. My next screen was that the ETF had to have been around for at least 5 years. There were some promising funds that are certainly worth considering due to their fantastic growth so far and prospectuses, but I like to see a track record to show the model is proven. Some of those ETFs worth considering are SCHY and ABDE. Additionally, I eliminated ETFs that had semi-annual payouts or a greater duration. Income investments are meant to be lived off of, and that lengthy payout gap is just impractical. I also eliminated ETFs that were in emerging markets, as I think of emerging markets as potential growth investments, not income investments. Lastly, I screened for dividend growth. If the dividends aren't growing, inflation is going to eat away at their value consistently. So ETFs with a 5-year dividend compound annual growth rate of less than 4% were eliminated. That means BYMI was off the list for those of you wondering. I searched through every ETF provider that was substantial, and here's a list, which would be too long to read. The very small list of ETFs we end up with is IHDG and IQDG, offered by WisdomTree, HDA and HDEF offered by Xtrackers, and GCal offered by Pacer ETFs. So now that we know these dividend metrics are functioning as we want them to, we have to make sure our capital isn't eroding. So I look for price appreciation over a 5-year period. Key distinction here, not a total return. This is where HDA barely made the cut, having only a slight appreciation at the time of this recording over 5 years, and HDEF isn't far off. So maybe some of you wouldn't consider investing in HDA at this point. So now we can determine which ETF we'll select based on our investment horizon and objectives, whether we're looking for dividend growth or dividend yield. So here we have the current dividend yield for each ETF. We can see that the two funds offered by WisdomTree, IHDG and IQDG, are very low yielding in comparison to HDA and HDEF and GCal. But current dividend yield is not the whole story. Next, we see the 3-year and 5-year dividend CAGR, and I've sorted these ETFs by the 5-year CAGR. We see that IHDG has an insane 5-year CAGR of 65.7%, but that's probably because their collection of stocks has a large allocation to the consumer discretionary sector, which is cyclical in nature and is represented in the difference between the 3- and 5-year growth rates. In general, I like to look for consistent dividend growth rates across timeframes, like HDEF, GCal, and HDA. We can also see that IQDG is significantly lagging the group in terms of yield and growth, and should probably be eliminated from consideration. So from a dividend yield and growth standpoint, the winners, in my mind, are HDEF and GCal, but there's still more to the story. If you've watched my ETF analysis video, which I'll link in the description below, you'll know sector diversification is an important consideration. So here we see the sector breakdown for HDEF and GCal, and we see that the top industry for GCal at 26.5% is energy. Energy is a highly cyclical industry and has currently been performing well, compared to HDEF's top industry, which is financials, which is a far more robust industry than energy. And I would conclude that GCal might see some dividend downside in the future, when energy has a down cycle, and HDEF's dividend is probably more secure into the future. If I had to choose only one of these ETFs to buy today as a dividend growth investor, I'd choose HDEF, as it offers an amazing current dividend yield of 4.56%. The 5-year dividend CAGR is 14.67%, and I like the sector diversification better than GCal. Although we don't just have to buy one ETF, you could buy them all, or mix and match to suit your investment needs and thesis. Lastly, here's the total return for the 5 ETFs, as I know some people are concerned with total return. If you're wondering why I used 5 years of data, that's because none of these funds have been around for 10 years, and I wanted to keep the data I used consistent and clean. If you want to quickly analyze an ETF for yourself, you may like this video. Thanks for watching.
I'm not a financial advisor, and this is not financial advice. This is for educational and entertainment purposes.